Ladies and gentlemen, from an undisclosed location to the craziest industry in the world, it's the Micro News Update from Mortgage Services 3. Micro News is the mortgage industry's credible, readless, and off-the-wall newsletter. And I'm not kidding, it's really, really good. And now, everyone's favorite mortgage nerd, Rick McKinley!
Well, good morning, everyone. Thanks for tuning into the update. This is the very first Micro News Update. So thank you for tuning into the Genesis, the initial, the alpha, the numero uno. Hopefully this is going to be beneficial for you. Just to give you the format for those of you that haven't been on our test run, what we do is we try to give you some content that's going to help you do business better. So that would include maybe an industry update. You'll get some MSI changes that have taken place over the last week. I'll give you some sort of a product nugget that will help you to sell better. Maybe it's something you haven't done before, or maybe you just forgot about it because you've been in the business so long. And the good news for this week is that the wholesale partner announcement, which is our MSI changes, they're pretty light for this week. If you saw last week's PDF that went out to all of our correspondent and wholesale partners, basically we were talking about the net tangible benefit statement and the fact that you had to incorporate your costs versus the return and how many months it would take. If you were over 84 months, that wasn't going to work. It was going to throw you out right away. Well, we've actually taken away the martial law on that, and as of this week made it into more of a suggestion or a guideline. We're going to be trying to be prudent about this, so we will be looking at every deal, but that's not going to be the automatic deal killer. So that being the case, and because it's light this week, I thought that maybe I would take a phone call or two. Actually, you know what? I'll take one phone call. I get so many phone calls every day. You should see my phone bill. I mean, it's like I almost pay extra over the unlimited plan. So my phone's really busy, and I thought, I'll just get you in on one phone call, and then you can kind of be let in on the back door and see how this works. So I got my new phone right here, and we'll just watch my phone, and then you can hear what we're going to talk about. It could be anything. It's kind of a random. It's almost like an exciting waiting to hear what people are going to ask. So maybe one of you could call, because that way we'll have someone. And my phone number is 763-458-4. You know what though? That's probably a bad idea. Oh, here we go. Hello, this is Rick. Oh, yeah. Hi, Susan. Yes. Yeah. Okay, so if I understand you correctly, you're just ordering the appraisal and you need a loan number and you don't know how to get it. Well, that's a good question. Yep, I can help you with that. So there are 3 ways to get a loan number, and here they are. One is if you lock the loan and you could get a loan number right away, it'll just automatically be. No, you don't have to lock now. You can float, but if you're floating, then you would either want to email the pricing department and they can issue you a loan number automatically, or one thing that I've done is if you're submitting your file, of course, if you're ordering your appraisal, you're probably not submitting your file yet, but if you were submitting your file, there are cases where the file openers could order that loan number for you. So really the 2 that would apply to you in most instances would be either locking, and then you'll get a loan number, or requesting that loan number from the pricing department. You can just email them at msipricing@msiloans.biz, and they will get that loan number right to you. They're really quick. Oh, okay. Did that help? Great. You're welcome. Have a great day. All right. Bye, Susan. Well, there you go. I think we'll wrap up the calls for today, and let's move on to our special rule with Fannie Mae that I wanted to talk about. You see, typically a principal residence is a property that the borrower occupies as his or her primary residence, but there are a few potential conditions that Fannie Mae considers a residence to be a principal residence, even though the borrower will not be occupying the property. The first is multiple borrowers. The next is where parents want to provide housing for their physically handicapped or developmentally disabled adult child. And the third would be children that want to provide housing for their elderly parents. So let's go into the bottom two. If the child is unable to work or does not have sufficient income to qualify for a mortgage on his or her own, the parent is considered the owner-occupant. Next, if the parent is unable to work or does not have sufficient income to qualify for a mortgage on his or her own, the child is considered the owner-occupant. So we have two instances here where a child or a parent could get a loan for their dependent, be considered the owner-occupant, and now get owner-occupied primary residence rates and LTVs. I'm sure every once in a while you're going to run into a case like that and wish you knew what the right options were. Now there is another option, and that's doing a non-occupant co-borrower situation with FHA. Let's move on now to USDA. So why do we want to do USDA? What's the big deal? What makes it different from all the other programs? Well, it is 100% financing, and there's no annual or monthly MI that we have to be worried about. But what about the other detail? Well, first of all, for those of you that are brokers, you get to use your own appraiser. We don't have to be concerned with HVCC necessarily. So that's good news. It is 100% purchase, but what about seller contributions and paying the closing costs? USDA still allows for 6% plus for seller contributions. Further, if the seller doesn't want to contribute and there is equity based on the appraised value versus the purchase price, that gap between appraised value and purchase price could be used to pay for closing costs and prepaids. Let me show you what I mean. If you have a purchase price of $110,000 and let's say that the appraisal comes in at $117,000, well, we've got a gap there of about $7,000, and that can be used to pay for closing costs without the seller contributing anything. One final thing that separates this from other loan types is that if you run into a property that somebody wants to purchase and it needs a little fix-up, maybe it has some health or safety related items notated by the appraiser, and those items are $10,000 or less, well, they could be rolled into the purchase price and therefore financed into the loan amount. There's more detail behind it, so I don't want you to get wrapped up in the detail right now, but to know that, that is available to you. Well, that wraps up the Micro News Update for this week. Hopefully it's been helpful for you, and if you have questions or if you would like to see other content posted here, put your comments below this video and we will be sure to include that in future episodes of the Micro News Update. Thanks for sending your loans to MSI. Your account executive appreciates it very much and they look forward to hearing from you. Have a great week and we'll see you next Monday. By the way, we post the rates and the turn times after the wrap up, so make sure to stay tuned for those.